Well, good evening, everyone. It's 7 o'clock, so we might start this session. Thanks so much for joining us, and welcome to the critical updates for new fellows that we're running through Avant Practice Solutions and supported with Avant Law and Avant Financial Services tonight. I'd like to start by acknowledging the traditional owners of the land. In the spirit of reconciliation, Avant acknowledges the custodians of the country throughout Australia and their connections to land, sea and community. As a group, we pay our respects to their elders past, present, and extend that respect to all Aboriginal and Torres Strait Islanders people here today. I'm coming to you from Wurundjeri land in Melbourne, and we got a fabulous panel today to cover some topics relevant and critical for new fellows. So I'm David Williams. I am a neurologist and I'm also General Manager of Avant Practice Solutions. And tonight I'm joined by Sav Russo, who's an associate in Avant Law, and Kate Farley, who works at Avant Financial Services. And what we've put together tonight is a number of topics that are highly relevant for doctors emerging from their fellowship, whether they are in specialty areas or specialised general practitioners moving into the world of private practice. And the reason why this is critical is because medicine has changed a lot over the last 131 years that Avant has been around. Avant is a doctor's company. And what this mutual organisation recognises is that doctors, if they're going to maintain their work and create a living, they have to work in private practice. Well, most of us have to some extent in the community. So this series of lectures and the support from these parts of the Avant business are there to help out doctors emerging into private practice. The topics that we're going to cover today include looking at the way that billings happen in private. We're going to look through some of the legal setups of working arrangements so that you do know your rights. And Kate's going to cover off at the end there financial considerations as you climb the career ladder. These are important. All these components are important so that you can maintain your independence and be the best doctors that you can. So let's have a look first at the best practice for your billings. What is the best way to do things in order to set yourself up as someone who can operate within the industry of healthcare provision in Australia as a doctor? This is a very certain number, and it's 100%. This is the number of doctors who will make an incorrect claim at some stage during their career. And when I say an incorrect claim, that is a claim that goes through Medicare or an insurer. 100% of people get it wrong at some stage. So errors happen in this. And the reason why, some of the reasons why they do happen is because of poor process, but also poor understanding. So I do want to cover a couple of pieces of how Medicare is set up and how private insurance works in that system, so you can understand a little bit about how submissions go and the best way to protect your billings. In private practice, if you don't get your billings right, you end up not getting paid. That's not a reason not to work in private practice, but it's a reason to try and get things right. So the starting point in Australia is that private health or private practice is subsidised by Medicare. Medicare is something like $35 billion spend by the government each year to support the provision of healthcare services, pathology services, radiology services, and the pharmaceutical benefit scheme. So it's important that we need to comply with Medicare's rules in order to have access to that subsidised funding. Here's a simple, hopefully, diagram that allows you to understand what Medicare system contributes to and what the Medicare benefit schedule relates to. So on the far left-hand side, we have the Medicare schedule. That Medicare will tell us how much each episode of care is worth. And this is a number that's devised by Medicare and agreed and adjusted each year. By the way, it hasn't kept up with inflation since it was started in the early 1980s, but Medicare defines what an episode of care is worth. So if I'm reviewing a patient as a neurology specialist, Medicare says that's worth about $75. What Medicare does is, if I'm seeing the patient in my rooms, they promise to give me, if I bulk bill the patient, 85% of that value. Now, that doesn't make a lot of sense, but that's how it is. There's a 15% discount that Medicare get for us providing that service and us bulk billing them. That means the patient doesn't have to pay. What most or many specialists will do, and a large proportion of GP interactions as well, is that we'll take a patient payment for that. So we will ask the patient, co-contribution. So we'll ask the patient to pay for, in this example, maybe $200. So they're $130 out of pocket, and Medicare will reimburse the patient to the value of 85% of what they say it's worth. So this is the mixture between bulk billing as an outpatient or in your clinic, and private billing where the patient gets reimbursed by Medicare. These days, that's done electronically and automatically at your front desk of your practice. Now, for the people who are working in hospitals, Medicare promises to only pay 75% of what they say an episode of care is worth. So in this case, if I'm reviewing a patient, it might be something more like $59 or $60. What the private health insurers say is they'll fill up the rest. So they'll pay up to the full 100% by providing that 25% uplift in spend. And what most insurers will do is say, actually, we know that you would prefer to earn more than what Medicare says it's worth. So they will pay up to 10 or 40% above that amount. So if you're seeing a patient in hospital and they're privately insured, you'll get somewhere around 140% of what Medicare says it's worth. It's important to remember that because we are, as doctors, able to charge a patient extra money on top of that. So we can charge an out-of-pocket gap. And if that gap is within the right amount that's approved by the insurer, then the patient gets their full 10 to 40%. They get the 25% of the private health insurer top-up and the Medicare amount. If, however, we charge more than what their allowed gap is, the patient will not get this 40%. So if we get our billing strategy wrong and we charge the patients too much money out of pocket, for some insurers, they will pay the patient less. The reason for going through this complicated mix is that Medicare sits below this all, but it's the private insurers that will determine how much your patient gets back when they have an episode of care. And there are rules around that for every single different item number. This might sound complicated, and that's because it is. And it's really important to get this right when you're putting together your billing strategy. The reason why it's important is that Medicare and the private health insurers work together. They say what the rules are. They will interpret the rules and they will pay you or reimburse your patients according to their interpretation of the rules. That means that there needs to be a dialogue where there's dispute, either by the amount you charge or the sort of item numbers you've done. And that is not something that you're taught in medical school and probably haven't learned in your fellowship about how to have those conversations with private health insurers. So that you can understand where that works, I want to take you through mechanics of submitting an item number. So item numbers are the definition of episodes of care. They're attributed a value by Medicare, and they're assigned a value by the private health insurers. Amongst all this, you need to set your fees as well for the out-of-pocket fee. What happens when you've seen a patient in hospital, for example, is that you make a submission through an online portal called Eclipse, and that can be done through a billings app or practice management software. It needs to be approved by Medicare, so it has to meet the definitions of the item number. Then that gets passed on to the health insurers here, and it might be one of literally scores and scores of different insurers. I think there's 26 that you need to register for before you start working in a private hospital. So it has to be approved by them. Once it's approved by the insurers, then they have to send the money to your account. And after they've sent the money to your account, they will send you a remittance advice saying, we've paid it. And it's only then do you check off whether or not they've accepted your bill. That kind of sounds great and it's smooth and it will work most of the time. But I've said at the first slide, 100% of doctors will have this process disrupted at some stage. And I want to take you through a little bit where it can go wrong. So Medicare can reject your item if it says that the patient isn't able to be claimed on, isn't able to have that number processed. They will reject it. The insurer might reject it because it was poorly annotated, wrong time of day. Maybe you did the left leg instead of the right leg, or that the referral is not valid, or that there's a dispute about whether or not the item was required. And that is one of the most troublesome workflows to try and overcome that. Equally, it's not unusual for insurers to pay the wrong bank account or send a check to a hospital you haven't worked at for 5 or 6 years. So you might not receive the money even though the insurer has paid. Either way, you don't get the money back. So there's multiple levels at which you might not get paid for an episode of care that you've done. And routinely in Avant Practice Solutions, we work with many doctors' billings, and it can add up to tens of thousands of dollars a year from rejections, either from your outpatient stuff or inpatient stuff. It wouldn't be unusual for us to find doctors rocking up with $40,000, $50,000, $60,000 of rejected fees that they haven't actually known how to manage, and they accumulate pretty quickly over the years. What that means as someone who's moving into private practice is you need to have a plan for managing your billings. The first couple you might submit, you might get paid, but as you get busier and busier as a doctor, you're probably not going to spend the time going over the paperwork or learning the tricks on how to speak to the insurers to make sure you get paid. So there is a choice that I want you to make. You have the choice between a good life or a bad life. And a bad life is one where you are stuck with rejected bills and a pile of paperwork that you need to go through in order to get paid. The good life is to have a very good secretary or service that reliably submits bills, has a process for understanding when you're getting paid, following the reconciliation process, and also contacting those multiple points to make sure that if there have been rejections, you do get paid. So that's about order and influence on your billings. I would recommend as doctors, for the sort of fees that it costs to do outsourced billing, that you spend those 2 or 3% on someone else doing the hard work, you concentrate on seeing patients. Here's the take-home messages about the practical steps to be successful in understanding the landscape. I've described already the impact of Medicare and private health insurance and the importance of getting your system right. So what can you do? Well, you need to know your item numbers for any specialization, whether it's in a GP clinic or in a hospital. You need to know the definition of the item numbers that you work under. The MBS schedule is available online, and each one of you will use a favorite 5 to 15 item numbers. For some surgical or anesthetics colleagues out there, they'll use perhaps 40 different item numbers, but most of us will work in a small remit of 5 to 15 item numbers. And the item number relates to the type of service you've provided. Now, if you know what the Medicare value is of them in terms of dollars and the definition of it, then you're a really good step on the way. But you really need to know your favorite numbers, the most frequently ones. You need to know them off by heart, what they're worth and what the definition is. In terms of you putting together a strategy to doing billings, how much are you going to earn as a specialist? Now, if you've had this conversation with your senior colleagues, then you're probably a step ahead of many others. But most of us, when we've finished our training, we don't really know how much we could earn. We just hope that we can finally get a nice car and pay off the house a bit faster. In terms of you understanding what you could earn, this is important for building a billing strategy. Estimate the type of items that you're going to do during a day, whether it's a consulting session or during a typical list. What is the sort of mix of operations you might do, or items you might charge on your ward rounds or in your clinic. Have a look at the values that Medicare ascribes them, and then add the values that the private health insurers say they're worth. And from that, you can work out what a session of consulting is. And by way of example, you might have a 4-hour consulting session where you expect, within 6 or 12 months of starting up, you'll see 12 patients in a half-day session, and you're going to do a certain item number, and you're going to charge a couple $100 for those item numbers. At the end of the day, you can say that session is going to generate about $1,500 or $2,000 worth of revenue for that morning. And then you can start getting an idea about what you could or should be earning for your work. In terms of understanding how much you should charge, it's really a question of how much do you want to earn for work. So you can see how many patients you're going to see, what sort of item numbers you're going to have, then work backwards from there to set your actual fees. Is it going to be $195, $215, $240? You really need to understand how busy you're going to be and what sort of hourly rate you'd expect as a highly qualified doctor. Now, understandably, many emerging fellows are a little bit nervous about charging what I think they're worth. And I'd encourage you all to think that you are a highly qualified expert. You deserve top dollar. And there is very few people out there that look for a discount doctor. You just don't look for the cheapest doctor on the block. So value your time that values your expertise relative to the rest of the Australian community, not the professor who taught you or the surgeon around the corner or the GP who owns a practice. Value your time according to what, the amazing amount of training you've done. You do have to be reasonable with your compensation. So it's no point trying to charge $10,000 for a $100 item that everyone else is charging $100 for. That will be called out and you'll end up on the front page of the newspaper. And to defend your fees, you have to be able to argue that they're reasonable. I'm highly qualified. I did a lot of training. I give really high quality service where I'm charging these fees to see the patient in this hospital because it takes me an hour and a half to drive there. These are sort of conversations that I've seen play out when people have been complaining at a high level about their fees. What else you should do is, so you understand the Medicare schedule, you want to benchmark against your colleagues. So it's quite possible to do a secret call around, find out what the surgeon around the corner, see what she's charging, or the GP owner, just understand what the market is out there a little bit. And consider the private health insurer schedules, because remember, they will not pay patients as much if you charge over their allowable gap payment. It's a really important concept. Now, you are able to charge more, and that's fine. You just have to be aware that your patients will get less back from their insurer. And if you're happy for that, then that's also fine. That's part of your schedule. So let's say you've done those considerations, and for those of you who aren't taking notes, these slides will be available in a recording afterwards. So that's fine. But you've set your fees. You kind of know how much you want to earn for the year, and you've guessed how valuable you are as a specialist, specialized doctor. What you do need to do is set up an invoicing system. So inside a clinic, this will be through your practice software. You need to have very clear administration workflows from people that know how to bill. And it's not sufficient to get the best medical secretary on Seek or hire the local medical student to do it. It's a really detailed process that I've shown you at a couple of points can fall down. And if you don't have a workflow to find what items have been rejected, you simply won't earn the amount that you need to. You need to have bookkeeping as part of that, and so that you can see what you have been paid. That's that reconciliation process. And if you're working in hospital, I urge you to think about a billing service that's outsourced. You don't want to be spending your time going home submitting bills, and mostly the billing services will charge between 3 and 5% as a success fee once a bill's paid. So they'll follow up for you. You really should create a standalone incoming bank account. This will help with your taxation considerations at the end of every quarter. Don't put it into your savings account. Don't have any income from your practice services to go into the family mortgage and so on. Have a separate bank account to receive the money so you can reconcile it easily, and then shift it onto your mortgage account or to your savings account after that. And if I haven't said it already, I'll say it again, a reconciliation process is really important. I probably didn't know what this meant properly when I was emerging as a fellow. So for those of you who haven't really considered it, I was with you. But the action of making financial accounts consistent is so important for billings. If you're unpaid from one $1,500 knee replacement, that's a lot of money that you've missed out on. And there's so many ways in which it can happen. And we've worked with doctors that are literally tens and tens of thousands of dollars behind every year because of poor reconciliation and not a line of sight of who's paid and who's hasn't. That's a quick run through of some high-level tips. So I've told you a little bit about the process, a little bit about how you'll set your fees and what's fair and reasonable, and the main tips about having a system for submitting your bills and having a reconciliation process. I've hinted along the ways, and you won't be surprised that Avant Practice Solutions does have the Billings Plus platform. This is a full service where an account manager will look after your submitted bills that you submit simply on your telephone by taking a photo of the patient label. The end-to-end service is what we're really proud of. What it means is that you don't have to do any of that work. And if you get paid, if there's any rejections, the team will follow up for you. As part of the service, you have an account manager. There's a straightforward registration process. So to be able to bill an insurer, you have to register with them. There's 26 different forms you need to sign with every insurer so that you can work with their patients. If you're not registered and you've seen one of their patients, they're not going to pay you. That process can be taken care of. So I'd urge any of you who are starting private practice and going to be working in hospitals, take advantage at least of the free registration with all the insurance companies. The team can look after you there. And then you have access to the billings platform, which is you only pay as you use it. So it's a really nice benefit from being a Avant Practice Solutions customer. For the team that have joined the call, there is a chance to win a $200 RM Williams e-gift card. So I would encourage you to use the QR codes to get your name down for that. And for those of you who are keen to be using or to have some service on the billings platform, for people on this call and who've registered for the seminar, there's $50 credit that will give you a really good start for billing, which pretty much with a 3.2% service fee, that will pretty much cover the first $1,500 of your billing, more give or take. So I'd encourage you. This QR code will come up again during the talk, but hopefully you've taken away a few interesting points about billings there. Really, really pleased to be able to work with Sav and the whole team at Avant Law. And Sav, you're going to take us through some working arrangements so that emerging fellows can understand their rights and obligations and potentially understand some of the contracts that are put in front of them, right?
Absolutely. Thanks, David. So yeah, as David mentioned, we do a lot of work with specialists in the private sector. And one of the most common times where we're talking with specialists is because they come to us to review an agreement that, they've been given by a practice or private facility, and they're proposing to enter into it. And they kind of want to understand, look, what's going on here? What are my rights and my obligations under it? So look, first, I'm going to give you just a bit of an overview of some of the most common arrangements that practitioners enter into. And then also give you a bit of an understanding of if you're thinking of engaging anyone else to assist you in your practice. So you're looking to get some reception or admin support or get a locum in, for example, what are your obligations and rights in those circumstances as well. So in terms of the common working arrangements for specialists, where you're going to work in an established practice or a private facility, the first thing you should really be asking yourself is, how am I being engaged? And there are, 4 really common types of engagements that occur. So there's independent contracting under a services and facilities agreement, a licensing agreement, or where you're accredited to work at a private hospital. One working arrangement I haven't included up there is employment. A specialist can absolutely legitimately also be engaged as an employee. It's just a lot less common in the industry, in the private sector. So I just haven't included up there, but I will touch on employment a little bit when I talk about some of your obligations in relation to engaging others. And so that would also apply if you are engaged as an employee in any circumstance. So the first type of arrangement I wanted to talk about is an independent contracting arrangement. And this is quite common, particularly where you're being engaged by an established practice or some sort of private facility. And it's important to note that this is different to a services and facilities agreement. And it's really common that these two types of agreements are confused in the industry. So an independent contractor agreement is an agreement where you are agreeing to provide services to an entity. So whether that's an established practice or some sort of private facility, and where you enter into an independent contractor agreement, the working arrangement is going to be governed predominantly by the terms of that agreement. There are some additional legislative provisions that also apply to independent contractors and do give some additional protections, including some new reforms that have come out. But primarily, it's going to be that contract that sets the terms of your engagement. So the terms of that contract and that agreement are really going to be critical when understanding what your rights and obligations are under the working arrangement. And I regularly review contracts with specialists, and the most common feedback I get when I've spoken to a practitioner about their agreement that they're proposing to enter into is, wow, I didn't realize there was so much in there that I shouldn't be agreeing to. And that's really because these agreements tend to be drafted by lawyers who are engaged by the practice or the clinic. And so they're drafted to generally benefit them. And, often there are terms in there that really aren't in your favor and that we kind of recommend you have tweaked to make sure that the agreement is also working for you and in your best interests as well as theirs. So some of the terms of independent contractor agreements that we generally recommend you're aware of and look out for if you are presented with an agreement, and that we advise practitioners on all the time are, firstly, indemnity and liability clauses. So these are clauses that generally require you to accept legal responsibility or liability for circumstances where otherwise at law you might actually not be considered legally responsible. And this is actually one of probably the most common sticking points we get to with between practices and clinics and practitioners. Often practices and clinics will really insist on quite extensive indemnities being included in these agreements, and generally those indemnities aren't going to be in your interests. So it's one of the points that we often advise practices on. Second one is restraints or restrictions on working elsewhere. So this can both be during the term of the contract and the engagement or after the engagement. And that's really important because I know that you guys often like to have your fingers in a lot of pies. So often, I speak to practitioners who are only working at a clinic one day a week and otherwise are working at private hospital or have multiple arrangements where they're working. And it's really important to make sure that what you're signing up to allows you to do that and allows you to fulfill all the kind of opportunities that you want to do to expand your practice. So it's important that you have a look and make sure you're not breaching any terms of your agreement and where you are working elsewhere. In terms of restraints, following the termination of the engagement, there are really two main types of restraints that might be in the agreement. So non-solicitation restraints are ones that stop you from soliciting patients, employees, or other practitioners who might be working at a practice or clinic for a period of time following the end of the engagement. And then a non-compete is one that prevents you from working as a specialist within a particular area, usually, for a period following the termination of the engagement. And there's a really common myth in the industry that restraints aren't enforceable, and that's absolutely not true. Restraints are enforceable and they're regularly enforced. So it's really important that before you sign on the dotted line, you know exactly what you're signing up to, and negotiating those up front is key if you're not really comfortable with what you're signing up to. Another thing to be wary of is notice periods. So, if you do sign up to work at a practice and you're not really comfortable with it, it's not working out, how much notice do you need to give under the agreement to leave? Are you comfortable with that amount of notice period? Ownership of and access to patient records is also really important, particularly from a clinical perspective. So if you're working in a clinic, do they own the records? Do you own the records? What happens when you leave? Do you have a right of access to those records? And that's particularly important where, the clinic is going to own the records. And if a claim, for example, is made in the future, you want to make sure you're going to have access to those records following the termination of the agreement. Another really, really important term is the terms regarding payment. So how are you being paid under the agreement? Are you being paid on an hourly basis? Are you being paid a percentage? That's probably the most common in the industry. And how is that calculated, if so? Often in these agreements I see, and this is particularly an issue where you're working at multiple locations, the practice will say, for example, that you'll get a percentage of billings, but it will be all billings that might occur at that practice will be connected with that practice. So you really want to be making sure that those definitions are really tight, so there's no kind of dispute. Another thing to consider is considering, what your business's legal structure is when you're entering to this agreement. So are you going to enter into the agreement as a sole trader? Will you have an incorporated entity, so a company that enters into the agreement on your behalf? Generally recommend you get some financial advice around this, and Kate can absolutely assist with that as well. There's no right or wrong. You can enter into an independent contractor agreement as either. It just is going to impact potentially, financially exactly where the money's going. Also important to register for GST, where you are going to be earning over the threshold, which you likely will, and that's a turnover of 75,000 or more per annum. It's also important to note, this is another common myth, that contractors aren't entitled to superannuation. Contractors are entitled to be paid superannuation where their contract is wholly or principally for their labour. And what that means in layman terms is generally if you're being engaged by a practice as a sole trader, so under your ABN without a proprietary limited company or some other entity, and you don't have a right to delegate your services under that contract, so you can't, for example, get a locum in to cover you if you're away or something, generally you will be entitled to be paid superannuation. So that's just another thing to be aware of, is having a look, and if you are entitled, are you being paid superannuation in accordance with law under the contract? So the next type of arrangement I'm going to touch on is a services and facilities agreement. And so, as I mentioned, this is different to an independent contractor agreement. And there's a lot of confusion, particularly among practices and clinics, to be honest, about the differences between these two arrangements. But a services and facilities agreement, a practice or a clinic to provide you with services and facilities to support your business. So an independent contractor agreement is where you are providing services, and a services agreement is where the practice or clinic is providing you with services. So you'll consult from a practice location, and they provide you with reception, accounting and billing services, etc. And then you pay them a fee for those services. Generally, that fee is either a flat fee, a percentage fee, or some sort of combination of both. Similar to an independent contractor agreement, the terms of your working arrangement are predominantly going to be governed by the terms of your services agreement. So it's really, really important that you understand before you sign up exactly what you're signing up to, and you're comfortable with those terms. And you'll see that a lot of the things that I've listed out on this slide are really similar to an independent contractor agreement. Lots of the terms I just talked about are really common across both types of agreements. In particular, in relation to services agreements, other things to be a bit wary of is understanding exactly what services you're being provided under the agreement, and making sure that's really clear, because that's ultimately what you're paying for and what you're going to be paying a fee for. So you want to make sure that you're getting everything that you're anticipating you're getting, particularly, debt collection services, for example. Is that part of what the practice will be providing you, or the clinic? How will the flow of funds work under the agreement? So will you be receiving payments directly from patients, and then will you pay a service fee, or will the practice or clinic collect those payments on your behalf? And again, how is that service fee actually calculated? What exactly is the practice or the facility getting a cut of? And in particular, are they trying to include any of your billings that might exist outside the scope of the agreement, and trying to ensure they get a cut of those, as well as things that exist within the scope of the agreement? So really important that you're really looking at the terms of that agreement and making sure you're comfortable with it. Again, you can enter into these types of agreements as sole trader or incorporated entity. Considering about registration for GST is also important. That applies across both of these types of arrangements. The next type of arrangement is where you're accredited to work at a private hospital. So this is generally where you're working at one of the larger private hospitals. The working arrangements in these circumstances are usually governed by the bylaws or facility rules of the hospital. And so those bylaws and facility rules are going to be really important, and usually your accreditation at the hospital is going to be contingent on you complying with those, and making sure you have an understanding of those, etc. So really important that you actually read them, which I speak to many practitioners who don't, and so that's really important. And interestingly, at law, what the courts have held in relation to, I suppose, those bylaws and facility rules is that they're generally considered that your grant of accreditation is effectively a license to work at the hospital. It's not that there's a contractual relationship between you and the hospital. So where there are issues or any kinds of disputes, it just requires a bit of a particular approach, I suppose, to managing those, slightly different to other types of arrangements. And then the final type of arrangement I just want to touch on is licensing agreements. So this is where you have a license to use a room at a hospital or at a private practice. And those other services I talked about, like the billing and appointment booking, etc., aren't provided as well. So it's really just the ability to use a particular space at a hospital or a practice. This is slightly outside my area of expertise. Usually if we're reviewing licensing agreements, they go to our property team because it sits much more in their area of expertise than in the workplace area of expertise. But our property team will regularly review licensing agreements for practices. Often it's a fixed fee type of arrangement where you just pay a base fee for the ability to use the rooms at the hospital or private practice. So the next thing I want to touch on is basically your obligations if you do choose to engage other people to assist you in your business. So previously talking about the rights, your own rights, and this is where you're looking to engage others to assist you in your business. It might be where you're just, hiring one or two people to help you with the admin, or if you're looking to, start your own practice and engage lots of other people to assist you with your business and grow. It just depends on your circumstances. So if you are engaging any administrative employees or nursing staff, those people will be employees at law, and there's mandatory compliance with employment laws for any of those staff. So for those employees, there's going to be minimum entitlements under the statute, as well as the applicable modern awards. So particularly the Health Professionals and Support Services Award, where you're getting that kind of admin support. If you're getting any nursing support, there's also the Nursing Award, which would apply to those. And the statute and the awards basically set what the minimum rates of pay are, the leave entitlements for those employees, annual personal carers leave, compassionate leave, parental leave, family domestic violence leave, as well as a number of other entitlements like overtime penalties. Superannuation will also be payable to all those employees. There's no way to contract out of those minimum statutory and award entitlements. So it is really, really important that where you are engaging someone, you do understand what your obligations are, because where you don't pay someone correctly or you don't comply with the minimum requirements under legislation, you're going to get into significant trouble, because there are quite significant penalties that apply in this area. It's also really, really important that you have a written contract of employment. Regardless of whether you get something in writing or not, at law, there will be a contract of employment where you engage one of these types of employees. It will just be a question of exactly what are the terms of that contract. And if you don't have a written contract of employment, what will happen is the law will imply terms that generally aren't as favorable to you as what a written contract could be. So getting something in place. And I think this is one area where in the industry, it can be really common for people to have, gentlemen's agreements around these kind of things, or engage friends or family to assist them on the side with their business. And it's really, really important that even where you do have that kind of relationship, you are really getting the documents in order to make sure you are setting yourself up for success and you're protecting your business and your practice. And finally, I just wanted to touch on if you're looking to engage, my slide's not working. Looking to engage other staff, so including other medical practitioners. So it might be that you're looking to expand your practice and work with other colleagues, or you're looking to kind of get a locum in, for example. So other medical practitioners could be engaged as employees, they could be engaged as independent contractors, or they might engage your business to provide them with services and facilities if that's the kind of practice model you're looking to set up. The type of arrangement that applies is going to impact your obligations, including any minimum entitlements, your superannuation obligations, any taxation obligations, including payroll tax. I couldn't get out of a presentation without mentioning that at least once. So make sure you get some legal and accounting advice before you do enter into any of these arrangements. One thing to be really, really cautious around is sham contracting. So sham contracting involves where you engage a person as an independent contractor, when they're actually an employee at a common law. And there has actually been some quite significant law reform in this area, with new laws commencing from the 1st of July. And effectively what the law will look at in this is, is this person genuinely an employee? Are they really, or are they really running their own business as an independent contractor? What level of control do you have over this person? Do they have their own autonomy, etc.? So there's a number of factors that they'll consider, and it's important that you do get it right. And again, regardless of which sort of engagement model you have, a written contract is going to be essential to setting yourself up for success and really protecting your business moving forward. And that's all from me. Thanks, David.
Great. And hello, everyone. As David touched on at the beginning of today's webinar, I'm Kate Farley. I'm actually a relationship director with Avant Financial Services. Some of you may have come across us previously as Kuyon Group, and I've been with the company for 2 years now. We are effectively finance brokers, and we only have doctors as clients. So what I can talk to you this evening about is just the nuances and intricacies that come with being a medical practitioner and how that can impact you now that you're looking to potentially go into private practice. That's the core part of tonight's discussion. As you complete your fellowship, a lot of opportunities do open up around the next step in your career. So one thing that always comes up in the conversation, you've just completed the fellowship, you know that your income is about to increase. You've heard people like David speak, you've heard Savanna speak, you've got colleagues that are, or it might be 1 or 2 years ahead of you, you have a good idea of what you're in for and what kind of income you're set to earn. So most people don't want to waste any time. You've spent so much time studying, so much time improving your skills. Let's get started. So what do you prioritize first? So do you need the new home? So that does come up a lot, usually not in your 20s anymore once you've finished your fellowship. So it's one of those things where usually you've already got the first house, or you might have an apartment and you now have this opportunity to upgrade the home. So is that something that is a priority for you? You might have a young family already and you need a house that actually is in the school zone that you're looking to move to, or just to fit you longer term. So is that the priority, or are you looking to potentially move straight into private practice and set something up from there? So that is something that I'm often having a conversation around with clients around their priorities, because with the home loan side of things, it's a little less flexible than what it is in setting up a practice, because home loans are heavily regulated. It's based on historical income, whereas with commercial or setting up practice, it's based on your projections, it's based on your future income. So that's where Avant Practice Solutions or an accountant can help you work out what the viability is for setting up a practice. But if you choose to go the home loan option, do you need to wait the 2 years? No, there's so much data out there, as Dave touched on as well in his section, is that we know what particular modalities will earn. We've got a pretty good idea. So what will happen is if we go to a lender that has a specific medico policy, we can rely on a shorter amount of time to verify your income. So it might be as little as 3 to 6 months. Some banks will want a letter of support from an accountant. Other banks might just want the client to do their own projections of where their income will land. And if we need that extra income, which with the way the rates have gone the last couple of years, we usually do, we can use that to get the approval for the loan. So you don't have to wait 12 months. You don't have to wait till you've lodged your return. You don't have to wait 2 years for private income as well. It's 3 to 6 months is usually all we can go. So. But moving into private practice. So what are your considerations? This is something that you might know already, or you might just be mulling over it at the moment. It's whether you stay in public or whether you go 100% working in private practice. Savanna touched on a lot of those nuances. If you are going into private work, how that would work in particular practices, whether you are looking to basically license through a room and run your own, or whether you're looking to pay a service fee, whether or not you do that through an ABN, or whether you do a company structure. So there's possibilities for a bit more options with your accountant if a trust is involved. So there's a lot of different things to consider. or whether you want to go into a private practice as a partner. So I've had some young fellows, effectively, they've got some mentors or they've got some contacts along the way, and they're looking to go into a practice, and they purchase what's deemed the goodwill of the practice. So they're buying into an established one so that they can effectively start generating income and take on a lot of that knowledge that the practice has already got set up, and they can just move into it. Or potentially what you could be looking at is starting one from scratch. So you scout the location, you scout whether or not you're going to sign a lease, or whether you're going to build a property, or even just convert something across. There's a lot of different ways that you can do the same thing. So what I usually find is that most practitioners, at least when they're starting out, will do a combination of public and private. But what the question mark would be is, if you are looking to set up a private practice, you're not buying into an established one, what are the questions that you need to ask yourself? So do you lease, or do you buy your own location and set up from scratch? There's been pros and cons to both. Lease, obviously, you don't have that capital expense up front. And if you get into the location and it doesn't really work for you longer term, or you want to move, you're not as heavily weighed down in that particular location. But there is a lot, especially in dental, for example, or radiology, there's a lot of fit out costs involved. So if you are going to lease, then you really want to be certain that that's where you want to go, that you want to stay, because you don't want to have to start that again either. So the benefit, though, with going into private practice is that you can fully fund whatever the capital expense is for setting up that private practice. So you don't necessarily have to wait and put a deposit on. Please don't offer the house unless you've had some advice. If that's your last resort, please keep that one away. You don't need to offer personal assets towards setting up anything in a commercial element if you're a medical practitioner and you intend to practice from that location. So what that could be is, if you're purchasing an actual physical premises, you can borrow 25 to 30-year loan terms. There is the opportunity as well to structure it under your super, which then helps kind of shepherd away that debt, so it doesn't impact your personal borrowing capacity. So that's very popular in the medical space. If you are looking to do a goodwill buy-in, how much do you borrow for that, and what are the terms? So lenders can do anywhere between 10 and 15 years for goodwill. Some will do interest only for the first 1 or 2 years while you're getting across the practice and help you manage your cash flow, whereas others will want immediate repayment of that loan. So there's a lot of different ways that you can structure the same lending depending on which lender you go to and what their preference is for your particular modality. Could be equipment that, depending on the lifespan of the equipment, it could be anywhere between 5 and 10 years. And that's also with a balloon potentially payable at the end. There's a lot of different structures that you can do with that. So one of the best things that I find about having commercial lending or setting up a private practice with the borrowing side of things is that every bank is different. So it is actually really good. It can be very confusing if you're going into it and you're not sure what to expect, and you're used to a home loan where you just tick boxes and it's very easily available. There's information available. With commercial, unfortunately, there's not free information available, but what that does mean is it gives you the opportunity to negotiate it so that it fits the terms and conditions, the repayments, the cash flow impacts can actually be tailored to suit what your requirements are. If you're going into private practice, where do you get your patients from? So who are your referral partners? Where do you find your patients? Are you in close proximity to hospitals and partners that would actually be sending you patients? And it's also something to consider when you are setting up something from scratch. What's your proximity, and will that impact you both positively and negatively when you're actually sourcing patients? And cash cost overruns. Anyone who knows me knows that I'll always say money is easy to get when you don't need it, really hard to get if you do. Always have some buffer money for overruns if you are planning to do anything. It could be for personal, if you're doing a home renovation or you're planning a family expansion instead of a practice expansion, or or ultimately setting up your practice, you've done your cash flow projections, but things just don't go quite to plan. If you've got buffer money, yes, you don't want to spend it. No, you don't want to have to put it aside. That's something that you don't want to do. But if you've got it and you need it, it is so much better to have it there than losing sleep going, how am I going to actually pay this invoice or get the final part of my fit out done or final part of my construction done, or I need this equipment and I can't afford to pay for it. So it's that kind of thing where the planning up front is really crucial. Overall, this is something where, and Dave would have touched on it, Savannah's touched on it, there's a fairly heavy level of complexity to running your own practice if you are moving into it from a government legislation compliance point of view, from an accounting, making sure you've got the structures set up correctly so that you aren't paying excessive amounts of tax just because the money is not being sent where it should go. What Dave mentioned about not getting paid correctly because you haven't got the actual billing software in place, and the process where you've got your separate accounts for your commercial, for your practice income, just so it's easy to keep it all separate than from your home loan. It's so easy now to transfer between accounts. You should always have your own accounts for any business income there. So that comes with your accountant. If you're looking to go into private practice, it's not something where you can just have your standard accountant. If they're a family friend or someone that doesn't have many doctors on their books, then they're probably not going to be as proactive with you, advising you what your options are and what you should be looking out for. An accountant is there to look out for you and advocate for you and make sure that you're structured in the best way long term. It's very difficult to unwind something that's been set up incorrectly. Had clients before where they've been told to put properties in different names and for the incorrect reasons, and to fix that, there's stamp duty and capital gains implications. That's a really costly error if you've got the wrong accountant giving you advice. And that moves into financial advisor. If you're looking to set up your practice, should you do super? It might come as a surprise for a lot of people, is that super lending for a commercial property is actually really easy relative to if you wanted to do a residential loan. It's actually not too difficult at all, and you can lend up to 80% without too much difficulty. A bit over 80%, we can still look for that for you as well. And it is a great way to borrow and get your own practice without actually impacting other options for you longer term from your personal borrowing capacity. Practice manager consultant. So that is something that Dave has touched on, but you need to be spending more time doing your billings. You need to see patients. That's where you earn the money. That is your level of expertise, and that's your core, what you bring to the table. If you've got other people around you, they do it every day, they'll do it more efficiently, they'll make less mistakes, and they'll advocate for you and highlight if there's anything that you need to be aware of. Lawyer, Savannah's pointed that one out too. There's a lot of pitfalls, both sides of the fence, whether you're signing a contract to join a new practice or whether you're hiring staff. There's so much that you need to be aware of, and it's really important that you get that right. Property advisor. Everyone's heard of an instance where someone's gone out, bought a property, thought that's close to home, that'll suit me from a practice point of view, I'll go out and buy it. They haven't got any advice on that. Might not be something where the council will allow them to set up the practice at all, or there might be a lot of limitations around how it can be converted. So it ends up being a money pit, or it ends up being something they just have to sell and start again. And then you've got the buying and selling costs of that property, as well as holding costs while you find out. Property advisors, if you get a good one, worth their weight in gold, because they'll save you time they'll stop you from looking at properties that just aren't viable, and they'll direct you into the right property, and they can do all the due diligence for you. This again, project manager. If you're doing a fit out or if you're doing a construction, if you've got someone there that can look at things for you and keep an eye on it, make sure it's all on track, that is massively helpful. There's plenty of options where might get an extra invoice or a quote for something that's well above and beyond what's been provisioned for, and this is where the buffer money comes in. but it could be that they can use their industry knowledge to go, actually, no, that's not right, and they have other contacts that they can bring in to keep those costs down. Anyone I know that's used a project manager has saved far more than whatever the fee is for that project manager as well. And lastly, I can't help it, have to leave it best for last, sorry guys, finance broker. So that would be where myself or someone similar comes in. So what we can do is effectively tell you where you stand. If you've got the wrong structure on your lending, or if you can't get enough funding, that can throw everything out the window. If you can't get the funding to buy that property or do that fit out, or the bank puts you on really unjust terms where there's really onerous repayments, or it could even just be that they want to tie in the family house unnecessarily. You haven't got someone advocating for you. These are massive things to be mindful of, and because a broker or just someone who can assist with this area knows the market, can tell you, all right, this bank might be good for this particular type of scenario. However, this lender is actually more generous once you've got established clients. And we do find that in the market. It's quite cyclical, so it's always good to have a look at that. And that's it, everyone, the Q&A.
Kate, thanks so much. And I mean, we're in lucky positions being able to try and get lending as doctors. And I think certainly the experience is that Avant Financial Services knows the lucky position we're in, is able to get better deals for us faster. So it's great to have that service for the Avant membership, and also doctors all around Australia. So I should have called out that we would take questions on the comments page or the Q&A tab down the bottom of Zoom. If there's any questions, we've got a couple of minutes to answer them. Kate, you made the point about lawyers specialises in medical care or managing doctors' contracts and financial arrangements. Sav, the great thing about Avant Law is it's all about doctors and doctors in practice, right? So that special expertise is all in-house, right?
Yeah, absolutely. So just like Avant Financial Solutions, we have an industry focus in the medical industry and in health more broadly. So we really do understand exactly what's going on. And it is really different. Previously, before coming here, I hadn't worked in this industry, and I didn't realize just how specialized it was. And I've had the real benefit of learning all about the industry and really being able to do a deep dive. And it's been fantastic. And it's made me realize just how important it is to have that really specialized expertise in the area.
Yeah, there's been a real commitment from Avant over the last 10 years to diversify the sort of support it provides the 80,000 members that are Avant members. And the practice solutions, the Avant Law and the financial services are real important parts of that, as we all have to manage our own practices, the legal requirements around that, and of course finance to get us going and keep going. There are haven't seen any questions pop through. Oh, yes, actually there's one there. How do you know what private insurers pay for certain item numbers? Thank you. That is a very good question, Liam. The private insurers publish their own schedule of fees. So there's a Medicare schedule of fees that gets updated twice per year. That's available online. The insurers will do their version of that, usually twice per year, where they'll say, well, we think this item number is worth that much money. What a billing service like the Billings Plus platform in Avant Practice Solutions will do is take you through what the updates in the schedule are from the insurer, and then advise about where the gaps lie in relation to those items. And it's different for every insurer. To make things more complicated, for some insurers, it's different between every state. So there literally might be 40 different prices that are attributed to a certain episode of care according to an item number. What I can say is, in a service like ours with a billings platform, or in a practice management system like Best Practice or Genie, they will have data files that get uploaded a couple of times a year to update those schedule of fees. as long as you have a practice manager or secretary or practice service that's looking after that, and they know when to update it. So that's part of the nuance of that, and goes to really the heart of what the message has been here, is that you're not expected to know all this. There is help at hand, whether it's legal, financial, or managing your practice. These things can be received from experts. It's better to be updated by experts when you're setting out, so that you're set up for success, rather than finding out years down the track that you've missed out on tens of thousands of dollars of billing, or you put yourself at risk from having a poor quality contract that you're signed to, or that you've actually got your structure wrong with your financing, and you're missing out on some benefits of an investment, or loss of deductions from tax as well. What we have on the last slide, and I can't move it on, I think, is the QR code again. So for those of you in the call, feel free to scan here. You'll have a chance to ask any of the questions that have popped up or might pop up in the coming days from this chat. Through every one of the services, it's possible to have just an introduction chat. It won't cost you anything. We can talk through the sort of ways in which we help thousands of doctors every single year get going in private practice. And if you scan it and you book a chat, you go into the running to win the gift card. And remember, for everyone who registers with Billings, you get $50 credit to that, and you get registered for free with those 26 insurers in Australia. So you start off on the right foot. In the absence of any further questions, on behalf of Avant Practice Solutions, Avant Law, and Avant Financial Services, I'd like to thank everyone for joining us. We hope you found it useful. It's part of the endeavour to help doctors moving into private practice, and there'll be more of these webinars coming up. We have got a recording, so this will be made available to you through your registration email, so you'll be able to rewatch this and scan the QR code to go into the running. Before you leave, please complete the post-webinar survey. A pop-up will appear, and it helps us planning future surveys as well. So enjoy the rest of your evening, and we look forward to speaking to you and helping out where possible. Thanks, everyone.